Hey folks, Jeff Camarda. It is Thursday, May 7th. Good evening, about just before 6 o'clock. Again, very tepid market news. Once again, the market opened very strongly I guess, on the coattails of modest bumps in some of the overseas markets. And then as it has for the past couple of days, the rally kind of petered out. It did close higher, but only modestly higher. So I continue to think that we're kind of bumping up against resistance level here. There's no way to tell for sure, but the thinking is, I think the market is going lower, and I think that view is shared by a lot of the media pundits and our portfolio board. The question is how much lower? Will we retest the March lows? Will it go even lower? In reaction to what continues to be just horrible economic news. We're at record unemployment. I mean, record like as long as I've been keeping records in the United States, and I think this is really just beginning to unfold. I'm mindful of the fact that Warren Buffett's been sitting on a huge cash pile for a long time now. Ain't buying nothing. Remember, he's buddies with Bill Gates, as was mentioned on CNBC today, who is who has expressed a concern that we'll see another, perhaps even worse, virus wave sweep the world. So there's a lot of uncertainty in the air. We are poised to jump back in when things go lower. If that happens, I think they will. And the question will be, do we go all in and we go in waves? I think there's going to be more waves. And this may be a while, by the way, before we kind of matriculate through this and maybe deep into the summer. But just the sheer our thinking of the sectors and areas that we are focusing on when we do deploy cash. And I'm going to look at some other screens here, please forgive me. But, and I think I mentioned this in a previous video, but our AIMS allocated investment management system, by the way, is what AIMS stands for, is focused on these asset classes. I'm going to first mention the conservative ones and then the more aggressive ones, and they'll be melded together depending on the client's overall risk tolerance and objectives. But certainly money market cash, in a conservative camp, ultra short and short-term bonds, intermediate government and corporate bonds, high yield bonds, junk bonds, utilities, which I think folks are going to still need electricity and to probably pay for so their power doesn't get shut off. REITs, but in a digital space. I don't really trust real estate anymore. A lot of folks aren't paying rent. I think that's going to get worse. Digital REITs are a REIT of a different color, really, and these are buildings that house computer servers and other information infrastructure, which we expect to actually do relatively well in this environment. And then the last safe class is physical gold. These are ETFs that invest in the actual metal for a variety of reasons, not the least of which is the inflationary, the fragrance of inflation that's been wafting about the air as the Fed's helicopters are running around nonstop, dropping newly printed money across the country. In the more aggressive camp, stock sectors in healthcare, consumer defensive, staples, again, toilet paper and not cruises, not consumer discretionary, technology stocks, communications services, very similar to technology. Non-U.S. component will be limited pretty much to Asia, particularly China, and that, I realize how ironic that is, but, we are investment advisors looking for opportunity and not the political pundits. And then also in the broad U.S. market, S&P 500, and also the broader Wilshire type U.S. market, and in gold mining stocks with the aggressive camp. And so that's for AIMS. The new draft of the Caesar investment management rules begins this way. Caesar Selection Rules 2020. The COVID-19 world pandemic has brought transformative, persistent changes to global civilization and commerce. We believe these changes imply devastating economic repercussions of a black swan nature that's unanticipated and huge, with profound consequences for general and sector-specific investing. Because of this, the Caesar portfolios are adapting to, one, target industries and companies believed to be relatively favored by the new economic reality and avoid or attempt to profit from those that are not. And number two, selectively use, as we have for AIMS, market timing as a primarily protective measure. COVID's potential economic impact is believed by us to imply grave recession or even depression risk. This in turn implies high magnitude bear market risk and capital erosion risk for investors. In this environment, timing may be used to attempt to preserve capital by going to cash and to opportunistically deploy cash if severe downtrends present, as I expect them to. And again, for Caesar, we went to cash. We sold a lot of stocks in areas like Carnival Cruises that we just thought were, really bad place to be. Kept a number of them that we think are more attractive, like IBM and Gilead, which has popped really nice based on the application of their drug for COVID therapy. But we still have a lot of cash in Caesar, and we'll be looking to deploy in more of the sectors that I've just enumerated. And that's more than enough for this Thursday evening. I hope it is sunny and comfortable wherever you are as we bump up against the evening. And we'll look forward to another update tomorrow, hopefully earlier than 6 o'clock. Thanks so much for watching, folks. Talk to you soon. Bye-bye.